Welcome back. I'm Ted Thomas, and the episode is all about, can I sell my house with a tax lien certificate? Well, I'm going to answer that right away. The answer is, you can always sell your house, and I'll tell you all the details in just a minute. I'm going to give you a few other details about how to make some money. I know you want to learn how to do that. I'll show you some inside secrets. And before I close out, I'll tell you a couple of things to avoid so that you don't make mistakes at the auction. Some big mistakes take place, and I'll come right back with all those answers. Okay, well, let's get right into it. Can I sell my house with a tax lien? Well, yes, you can sell your house with a tax lien. However, when you do sell your house with a tax lien, you're going to get cash money in. Now, you're not going to be able to grab that money and go. What you're going to have to do is the property has to be transferred. No property gets transferred in any county until all the taxes are paid. And that's why we tell people to buy them, because their money is always going to be protected. So if you're concerned and you have a house with a tax lien on it and you want to sell it, you definitely can sell the property. But just understand that as part of the proceeds, as part of the cash you get in, it will go to pay that tax lien. You can't walk away from a tax lien if you own property. The transfer won't take place. Every property has to have a transfer tax paid of some kind. And when that is activated, they're going to realize that the tax lien on the property hasn't been paid. So let's tell you how the local government works. The local government has been around for maybe hundreds of years, or if you're in the western part of the United States, maybe over 100 years. And during that 100 years, they've learned a lot of tricks. And the one trick that they learned more than any other is to collect taxes. So people are not going to get away without paying taxes. It doesn't matter whether you had a tax lien against the property or you were in a state where you defaulted on the taxes and they were going to confiscate the property. Go ahead and sell your property so that you can get some money out of it. But when you do sell, it won't matter what it's sold for. If it's sold for more money than you paid or less money than you paid, whatever it sells for, that tax lien will be paid. You're not going to get away without paying a tax lien certificate. So if that's bad news, I'm sorry for that news for you, but if it's good news, if you're an investor, so if you're an investor asking that question, now you realize how secure a tax lien certificate is. If a tax lien is issued on property, the government will get their money. So if you buy the government's tax lien certificate, wow, you're in good shape because you're going to get paid. And that's the promise the government actually makes. They said, buy the tax lien so that we have some money to take care of government employees. And if you'll do that, we'll pay you a high interest rate and we'll make sure you're going to be okay, that your money's safe and secure. Now, how can your money be safe and secure? Because what you get when you buy a tax lien certificate is you get the lien that the government owed on that property. So the property can't be sold, as I just told you, without you getting paid. So no matter what happens, you will get paid on your tax lien certificate, or you'll get the actual property. Now, if you get the actual property, because the lien has been wiped out, now you'll have purchased the property for 2 or 3% of its value. Wouldn't you like to own a property for 2 or 3% of its value? Absolutely, you'd like to do that. So this is happening thousands of times across the United States. Now, I don't care what state you want to talk about. We can talk about Texas, where they pay as much as 25%. We can talk about Seattle, Washington, where what they do is they sell the property at auction and they give the property owner plenty of notice. And when that money comes in, what are they going to do? They're going to pay their taxes. If you buy a tax deed in the state of Washington, you're going to get possession of the property. Once you have possession, it's yours. You can do anything with it. You can remortgage it. You can run the price up. You can hold on to it. It's your property. So you're getting the idea. So this always works. Let me tell you about Georgia. Georgia has 169 counties, staggering amount of counties. They're going to have 169 auctions every month. And people that buy at those auction properties are buying a redeemable deed. Now, what is a redeemable deed? That simply means if you buy that property, you're going to give the auctioneer whatever you bid and you win. You give your money to the auctioneer, so now your money's protected. You don't have to worry about that. But you can't take possession for 1 solid year. So for 1 solid year, even though your money's up, you have to wait. Now, anytime that the property owner comes in to pay their tax, they have to give you back all your money plus 20%. Now, where are you going to make 20% in 1 year? So how does a tax lien work? How does a tax deed work? Well, I'll explain them both. A tax lien certificate is a result of a property owner not paying their tax. So half of the states, when those properties don't pay their tax, the state rule is that they're going to sell a tax lien so that the local county can get money. So in those states, they simply say, stay in the house, Mr. Property Owner. You're not going to lose your house, but we're selling a tax lien certificate because we need money to run the government. So they sell that tax lien. You can find lists of those in the newspaper. You can find them online. You can find them at the county. There will be thousands of tax certificates available, depending upon the state and the county. So anybody can buy one. You can buy one for $50, $500, or $5,000. There's all numbers, all the way up to $50,000. So you can buy a tax lien certificate. When you buy that, the only reason you're buying it is because you want a cash return. You are not getting a property. You're not going to have to go cut the grass. You're not going to have to be painting the property. You're not going to talk to tenants. All you're going to do is buy a certificate that makes you money. All right. So those tax lien certificates are very popular, especially with older people, especially when I tell you that a tax certificate is predictable, it's certain, and it's secure. It's predictable because you know they're going to have the auctions. It's certain because you know what the rate of return is going to be. And it's secure because it's secured by the property. Now, what do I mean it's secured by the property? Folks, if those people don't pay the tax certificate, you're going to be awarded the property. You will own the property, and you will have only paid the back taxes to get it. Now, visualize that. You only paid the back taxes. Now, what you're worried about is that you're going to get a property with a mortgage. You don't want that. So what do? The mortgage is always wiped out at a tax lien auction or a tax deed auction. So you're kind of getting the idea. So think about what I've said. There's a nice opportunity for you. All right, what is a tax deed? Well, half of the states say, wait a minute, if you don't pay the tax, we're not going to be benevolent. We are going to seize your property. What they say seize, they're going to confiscate it. They're going to take it away from you. What are they going to do with it? They're going to put it out and sell it at auction so they can get the taxes. So they're going to boot you out of the property, then they're going to sell it at auction. And when money from that auction is going to be used to pay the taxes. In all cases, the county wants all properties on the tax roll. But if you have defaulted, you're not on the tax roll. They need properties on the tax roll to pay all their bills. So I hope you got the idea of why they have tax liens and why they have tax deeds. So let me button it up by giving you a couple of ways to make sure that you don't lose money. If you're going to a tax lien auction, you need to think, what is it am I buying? So you're looking at a list, which you got at the county or you got in the newspaper. It's just going to give you a number. If you take that number and put it in your computer, it will show a property because every property has a number. All right, what if the property isn't there? That there was a hurricane and it got blown away? What if there was a flood? What if it was burned up? So don't buy anything. Don't bid on anything. Don't do it unless you know there's something there. Now, some auction brochures will have a picture. Don't trust the picture. What if it's 5 years old? What if it's when the property looked in good shape and hasn't been taken care of? So you need to have someone look at it. Either hire a company to do that, hire a broker, hire an Uber driver to go out there and take pictures, but don't buy any property without seeing the property. Then the other problem that I watch at auctions all the time is people don't pay attention. They just think that because it's an auction, they're going to get rich. Forget that. You need to know what you're going to do with that property. So you need to have an exit strategy. So again, look at the property and then figure out what it's going to sell for. Now, how do you figure that out? Well, we have lots of classes. We could teach you how to do that. But the county will tell you the tax assessed value. You could go to Zillow and see values in the neighborhood. You could use the geographical information satellites from aloft and look down on it and tell you everything you want to know. In other words, there's lots of places from Zillow to the local MLS to figure out if the property has value. It might not have value and you're bidding on it. So you need to know your exit strategy so you don't overbid. It's not unusual to go to an auction and hear two things. One is, Gladys, and he looks at his wife, let's go look at what we bought. Those people might lose their assets. Think about what I just said. So that's the kind of mistake people make. Don't let that be you. Now, I'm Ted Thomas. I want to do something for you to help you out. Right below me, and you can get it, it's absolutely free, is a 1-hour video. That 1-hour video is kind of a quick start. Tell you about tax liens, deeds. I only have 6 or 8 minutes on these videos to tell you things. So you can subscribe and come to another one anytime you want. We'd love to have you. But if you want to get a 1-hour video, just right below me now, go ahead and check out that 1-hour video. I'm Ted Thomas.